Hi, moguls. Welcome to the show. Today we have a very special guest, Jack Rosenthal, and he is one of my youngest guests ever on the program. He's only 18 years old. He's an entrepreneur and investor, and he's the author of Teen Investing, which is the #2 best-selling book on teen investing. And he's also the founder of the Young Investors Club. Let's welcome Jack Rosenthal to the show. Jack, welcome.
Thanks so much for having me on. Really excited to be here. Glad we got a chance to do this. I know this has been 2 months in the making, but now finally here we are, ready to record. And here's a copy of my book for anyone who's watching this visually. I'm not sure if you can see it visually, but whatever. I'm holding up a copy right now.
Let me see that copy. Want some autographed copies for our guests. If you'd like an autographed copy for the guests, just email me and we will get you an autographed copy. And probably a discount. We always get discounts for our audience. But Jack, can you tell us where you're recording with me live today from?
Yes, so I'm calling in from New York, my house in New York where I grew up. I'm home for summer vacation. So I go to school in Boston, and I just finished my freshman year of college, and now I'm back home for the summer in New York.
So you are going to college in Boston. What university? Is it a university out there?
Yeah, it is called Babson College. It's a entrepreneurship school. It's about 20 minutes outside of the city of Boston. And yeah, I've really enjoyed my first year there. Just finished up freshman year. And then as far as the story of my books, yeah, like you mentioned, I wrote one book, Teen Investing, at the end of my senior year of high school, which did really well on Amazon and became a top seller in teenage investing category, which you can find on Amazon under Jack Rosenthal. Go plug the book. It's probably way easier to just order on Amazon rather than try email and get an autographed copy. So if you want it sent directly to you within 2 days, go get it on Amazon. Just type in my name, Jack Rosenthal. Anyway, then more recently, I wrote my latest book, Teen Entrepreneurship, which is all about educating teenagers on entrepreneurship, also on Amazon.
And then that's the whole purpose of why I started the podcast. So that teens and males and females and anyone that wants to learn investing would be inspired by our guests. Because, I'm not an expert, but I have experts on the show and people that inspire people. Like they really love Ned Brine's guest speaker because he showed us that you can start by just being like a regular worker that was just a manager of a grocery store. Not like it's just a manager, but he was a manager of a grocery store and became a multi-billionaire. So, and here you are, just a teenager in high school, and you had this best-selling book, and now you are coming out with your second book. So can you first of all tell me, let's just back it up. Like you're growing up, who taught you, or who were your mentors growing up as a kid?
Yeah, my biggest mentor is probably my grandfather, just because he was closest to home. Like a lot of kids aren't so fortunate. They got to learn from someone from a distance, like through a book or through YouTube or through some kind of internet method. However, my grandfather was a trader back in the day in the stock market. So when I was 8 years old, he set me up with my first investment portfolio. And the way that he got started, he said, okay, Jack, here's some money. You can decide however you want to invest it. You can't take the money out, but you can decide which stocks and which investments you want to put it in. So I decided how I wanted to allocate my portfolio at 8 years old. You can believe that. And I actually, it's like, it'd be great if I won. I ended up losing. I lost 4% that year. So, but it taught me a ton of lessons about like kind of what not to do investing really early on. Like I learned early on what not to do. So my grandfather kind of let me fail first. And then afterwards, he's like, all right, now I'm going to teach you how I invest. And I've been following his investment principles and his investment philosophy ever since.
Well, Jack, I'm going to have to ask you. So you're 8 years old. Did you even know what you were kind of doing?
Oh, yeah. No, I knew what a stock was. I remember back then, yeah, I knew what a stock was. I had some couple like experts. I remember I visited like an office of the guy that we knew, and some of the guys there explained to me some metrics that they looked at the stock. So I knew a little bit about it, but and I knew what a stock was, but I didn't really know how to analyze stocks.
Okay. And then, so can you share with us some things that you picked? Not that you want to say that they didn't do well, but just what was, as an 8-year-old, what were you picking? Can you share that?
Yes, I picked 16 different stocks. That was my first mistake right there. I only had a few $1,000s to invest in the first place. So trying to spread that among 16 different stocks and having all of them be really successful was pretty unlikely. What I should have done is gone all in on like 2 or 3 investments that I thought were going to do really well, not diversified, but really magnify my investment on things that I thought were going to do well. Because of that investment portfolio, I think I picked like 16 and 3 of them ended up doing really well. And those were like 2 of those were ones I was really confident about. But so if I concentrate more of the investments in the ones that I really liked, I would have done better. So I kind of followed like this investment philosophy you always hear when you're younger, diversify. But really I should have magnified more of my investments into these bets that I knew were going to pay off in the long run. That was the first one. And I forget exactly what kind of companies they were. It was a really long time ago. But another mistake I made is I've invested in a lot of small cap companies. And over the long run, what I've seen, at least for the last 10 years, I've been investing large cap companies, so companies with over like $1 billion or $10 billion market caps have far outperformed small cap companies, which are companies which are worth under $1 billion.
So that's some good advice. So you discovered that like the small cap companies, even though they might be good companies, you're finding that the bigger the cap was better for you.
Yeah, the growth wasn't there for the smaller companies. Like, they kind of started small and they just kind of remained small versus companies like Apple, which 10 years ago was 1/10 the size it is today, have just far outperformed that.
So do you remember one of them? Like, what were you picking? Were you picking food? Were you picking Disney? Like, were you picking cars? How did you?
No, that wasn't picking those. I was picking like these tiny little companies you never heard of, which had like a few $100 million or like $1 billion or $2 billion market cap, like very tiny companies. Oil companies, I think, were some of them. Some computer-related companies, and yeah, just companies that are very small, no one had ever heard of. They looked good from the fundamentals, but they just didn't really get a lot of growth.
And what were you looking at to find the name of those companies? Like, you're 8 years old, so did you have a computer back then, or like what were you looking? Where were you searching? Like, they didn't have Robinhood and stuff like that back then.
Yeah, no, thank God they did. So I was looking at Yahoo Finance, which was that was like the number one portal back then. Everyone used Yahoo Finance. Now like people use other ones, but Yahoo Finance was what I was looking at. And then kind of what I learned is then the next year I started doing much better in investing, thankfully, and I've been doing better ever since. But yeah, I learned, you want to invest in these large caps, solid companies. And what I really try and do is I try and buy, larger companies like, the Nikes, the Apples, even smaller ones too, like Xerox or companies like that. Crocs, been a great company recently. And just kind of buy them at a good price. So let's say like, some kind of event that's only going to hit them for the short run happens. Like, let's say the founder of it dies or something, like Apple, the founder, Steve Jobs, dying. It has an effect on the company in the short run, but like they're not going to sell less computers next year because Steve Jobs isn't alive. Like, people still own the computers and people still continue to buy the computers. So that's like an example of a good time to get in. So that's what I've had a lot of success with, buying strong U.S. companies and getting it at like a good price or a good time.
So that leads us to the question, like, how do you know how to get in? Because say example, like everyone's crazy about Tesla and, Elon Musk. So what would and these are always entertainment purposes. And our disclaimer is we don't give advice. This is just for educational purpose, for inspiration, and we don't give advice. So, but we can just share our opinion. So say something for Tesla. How is there like a point it's already hit big, so how would you would you invest in Tesla? Are you invested in Tesla, something like that, for example?
Tesla's one of the ones I haven't touched Tesla. I admit I've missed out on Tesla for a long time, but I just really feel like Tesla's valued a lot for the percentage of the car market that it owns right now, and it's not worth, in my opinion, worth more than all the other auto car makers combined, and it is currently valued at right now its current price. So I'm not a big investor in Tesla, but that being said, I've been wrong in the past, so I could be wrong in the future about specifically Tesla.
So example, say like if someone wanted to get into Apple, like the big tech companies, is it too late to get an Apple? Or are you trying to find the dips, even though those companies, on the company?
I'd say if you want to, I'd say Amazon. Amazon's a good price right now. I think it's like, anything close to 3,000 is a good price for it. In my opinion, obviously it's like professional. That's not financial advice. But I'd say Amazon's a great company. Amazon controls a huge percentage of the U.S. e-commerce business. I think something like 42 cents out of every dollar spent on the internet, retail sales in the United States is spent on Amazon, which is a very powerful number. And I think internet sales or internet retail sales still only make up about 1% of all the U.S. retail sales. Most of it's still in store. I think as that continues to shift online, Amazon's just going to keep eating up a bigger percentage of that. And that's why I think of all the companies, and also all the companies that innovate. Amazon really done a ton with the cloud. And if there's one company that could really take on Oracle in their cloud, it's going to be Amazon. So I'd say if of all the big FANG stocks, that's Facebook, Apple, Amazon, Netflix, and Google, I'd say Amazon's my favorite.
So even though it's because like you said, like a lot of people are like, oh, I'm going to get some lower price stocks or get a diversify your portfolio. But so this is the one thing that I want to share with our audience. So you're is it like, so less is more is what you're saying, and then sometimes don't be afraid of the price point that Amazon's around $3,000 because like you said, like you want to magnify less is more. Is that kind of like a recap? That's a good recap, or
Yeah, I say if you're pretty confident about investment, don't put all your money in it or even half. Make a significant investment in that so that you can see the rewards in it. And then the second thing would be getting in on these great companies, even if they're very large, just getting them at a good price. So even though it's like, a $1.5 trillion market cap, I think that that's deserved by Amazon. I think it's going to be worth much more than that in the future.
okay. And so so something like Crocs and Nike, I was just looking at those two because I miss I just for some reason I like miss going to Nike when it was in the 90s, 95, and now it's like almost 140, and then Crocs took off. So I really like that you like those two as well because I think I like them too, and I just saw that like they're so comfortable. And so how do you go around picking the categories for stocks? Because a lot of people go, well, which category is the best? Like, do you have any favorite categories that you look at besides like the cap on them?
I like companies that I think are going to exist in at least 20 or 30 years from now, where I think there's going to be more demand for them in 30 years than there is today. So like Amazon's a great example of that. You can easily see there being more need for cloud space and more need for e-commerce in the future. But also companies like Nike. Nike is funny, actually. The Young Investors Club, which is this group that I was involved with, which we could talk about later, but became a very large teenage investing club. We bought Nike, I think like, I want to say 3 years ago or something like that, like something like in the 80s or 70s or something like that. That investment's really paid off ever since. We also bought, we also bought Tesla too. That wasn't my own money, so I think I was willing to invest in Tesla there. But yeah, Tesla was a huge, huge payoff. I think we bought it like $200, $100, something like that. We paid
Nice.
the price for it.
Nice.
Yeah, we did really well on that. But yeah, I mean, I would say what I really look for is two types of investments. I'm looking for more of a value company than I'm looking for like a boring company. Like literally it's boring. Like the service they do is just boring. It doesn't get anyone excited. Like railroads, those are like Warren Buffett's favorite companies. Like, yeah, no one's going to get excited over a railroad. It's not even the newest technology. It's not even like the second fastest way of transportation. It's like the third slowest way. But there's a huge need for it for transporting like large quantities of things across the nation. And the businesses like that are always going to be great businesses, which are going to be, I could easily see a railroad being around in 100 years from now. It's been around for the last 100 years. I could easily see it being around for the next 100, just because it can transport, cattle and oil and everything in big quantities. So I like that. I like those kind of value boring businesses. And then, as I said, I like businesses that are just long term. So I wouldn't say a specific industry, just businesses that I think are going to be larger, or very likely to be larger in 20 or 30 years from now.
Speaking of like, so, what about oil? How do you feel about oil with all this battery operated cars and with these new laws coming in? Is there?
Yeah, I wouldn't touch oil.
Okay, so those are some of the okay, so can you so you're 8 years old and you learn about like less is more than like spreading it out, and then your grandfather then took you to the next step to show you how he did it. Is there any advice or tips that he gave you to really start really learning the game or learning the investment strategy?
Yeah, well, those were really the two tips he gave me. He said, concentrate your investments on things you really believe in, and look for value. So, like, he gave me some fundamental advice as far as some different metrics you can look at to determine the value of a company, and then pay based off that value that's calculated.
So that's really cool. So your grandfather was just he passed down his knowledge and love of stocks, and he even took you to companies. And then, so were you interested in it? Like, was this exciting to you, or was this more like a chore?
No, I was interested. I was eager for him to teach me about it.
And this is your field. What field of study are you studying in college?
In college, I studied finance.
Finance, yeah, that's what I figured. So, yeah, because you are an amazing entrepreneur, amazing investor, and I love how bright and smart you are in this knowledge. And can you share anything with us? So you're in your first year of college. Can you explain to us more about your? Do you want to explain to us about the Young Investors Club?
Yeah, sure. So the Young Investors Club is something that I started in my freshman year of high school. So 5 years. I was the first member, me, and I started the club basically as a way to invest money alongside other teenagers. So the idea was I was going to recruit kids. We were all going to put in $1,000 each, recruit as many kids as possible, and we're going to manage the money of the portfolio together. So that first year, I recruited 20 members, got $20,000 in portfolio. My junior year of high school, I had 40 members and $40,000 in portfolio. That was the year that I decided I just wanted to make the club the largest team investing club in the country. So by the end of that year, I had close to 100 members and over $120,000 in assets in the club. And then it became the largest team investing club in the country that I'm aware of. After that, my senior year of high school, I passed off the club to another member who was within the club. So I always wanted the club to be run by a high schooler, not a college student. And now the club continues to be run by this day by other high schoolers, and it's really cool that I founded it and I was a part of it.
So I love that. So this club became you said the largest teen investing club in the United States or in the world? In the United States, right?
In the United the world, it's kind of, I don't know.
Okay, well,
Dubai, I don't know.
So that's really cool. I love that. And so can any teenagers join it, or just that high school, or if someone reaches out, how do I refer them?
Yeah, no, so it's not really open to any teenagers. The way that we grew it is your parent has to be in this network. So in order to get all the members, we sent out blast emails to this network of parents. And as part of the agreement, we made it exclusive to just people that were children, their sons or daughters of parents that were in that network. So unfortunately, it's not available for everybody. And I'm no longer involved. But it's still really cool that it continues.
Well, maybe a lot of teenagers can be inspired to have their teenage investing club, and because you're still underage, and the parents, it's something.
That's someone that. Yeah, definitely. So I got someone who wrote to me for my book. There's an email at the end of my book. They wrote to me and they said, "Oh, I'm really inspired by what you did. I want to start my own investing club." So yeah, definitely a lot of teenagers have started clubs out from that.
Yeah, and can you tell us how your book came about? Can you tell us a little bit about your book, so that we'd like a lot of teenagers to read it, because you're very knowledgeable, and I think it'll be really amazing for young, aspiring, and I think anyone that's a beginner will find your book valuable, right? It would be for teenagers and beginners alike, right?
Yep, totally. It's for teenagers, advanced, medium, beginners. So really the reason why I wrote the book is at the end of my last year running the Young Investors Club, I decided to write a book on investing that kind of categorized and collected all the collective teachings I learned from teaching the club about investing all those years. So I gave out the book to everyone who's a member of the club for free. It's just kind of like a thank you for being part of the club. And then I realized there's a ton of other great investing teachings and a ton of great investing philosophy that was within the book, and I made it available on Amazon. And then the book started doing really well on Amazon. It turned out there's a big interest in teenage investing. And the book's done really well ever since. It's become a top seller in teen investing. And anyone can go get that book on Amazon by looking up Teen Investing, Jack Rosenthal.
Yeah, and can you give any advice to young investors and beginner investors, or investors that want to learn more? Any advice that you'd like to give to them?
Yeah, biggest advice is, and I'd say it's like, let's say, get the book. I mean, the book is I can only tell you so much in a podcast. I mean, the book really goes into a lot more detail as far as my own investing life, my own investing successes. So definitely get the book. I'd also say, check out, there's tons of great YouTube channels that have great information on investing. Tons of great investors, far more successful than me, like Warren Buffett. You can check out, and many other really successful investors. But yeah, the biggest advice I give as far as like personally what they can do is just get started in like a job or earning money somehow, so you can start building up a portfolio and building up money, because you can't start an investment portfolio without money. Start working a job, start a business, do something in order to get some money. And then as soon as you have $5,000, get started and start investing as a teenager.
And do you prefer a like a Webull, or do you have a favorite investing platform that you find to be ideal or that you prefer?
How many? I got a Robinhood, Webull, Fidelity. So I'm very familiar with a lot of them. I personally like Fidelity the most because that one has the least trading fees. So with Robinhood, a lot of people aren't aware, but when you pay like $110.16 for a stock, that stock actually costs $110.15, and Robinhood's making that 1 cent or 2 cent spread off every single order you order. So they're not charging direct fees, but they're charging indirect fees based off the trading. Fidelity and some of the larger ones don't actually do that. So I'd recommend Fidelity for anyone looking to get started. That's the one my grandfather set up for me, and it's worked out really well ever since.
Yeah, and that's like, I mean, Robinhood is super easy for you to use, and a lot of people like it it's just so clean and easy. But I'm finding out that you're being, if convenient and easy gets you into the game. But then if you want to move up to, I think I've been hearing a lot of great things about Fidelity, so I want them to explore other options as well. And can you share like one of your biggest plays?
Biggest investments?
Yeah.
Yeah, well, put some money into a weed stock 1 month, and then a month later, the price of the stock doubled, and then we sold.
Do you trade a lot? Do you believe in the vision? Did your grandpa say buy and hold, or is there a new kind of way do you believe in trading, buying, holding? Like, what's your philosophy? And is it, should we modernize it for these times?
Yeah, no, I don't trade at all. I'm just a buy and hold guy. I buy and then pretty much don't sell, or I'll sell occasionally, but then I'll buy back in soon. So I don't day trade. It's not something I'm an expert at. Heard some people have done well in day trading, but I think that day trading is a whole other thing, and it's kind of like a whole other field. And I haven't seen a ton of other teenagers who try to be very successful in day trading. So I just recommend buying and holding for the long run, and that's worked out really well for me.
Amazing. And so, okay, so you are taking a break from college. You're back in New York, and you're studying finance. And you have what was your second book? Can you share your second book with us?
Yeah, my second book is Teen Entrepreneurship, which is actually probably now my favorite of the two books. So I just wrote this one about a month ago, and this one's all about how to become an entrepreneur as a teenager. Got 100 pages of useful advice. It goes through, let's see, what has it got here? It's got some different businesses you could start as a teenager, some different business principles and advice that I've learned, some interesting stories of other entrepreneurs. Got a ton of really cool content in here, and that's definitely a book I'd recommend any teenager or any person who's looking to be an entrepreneur checks out and reads.
I love it. Oh my gosh, Jack. So is there, in COVID, did you find anything interesting? Did you learn anything with that kind of companies, like who profited the most and then who really didn't do well? And did you find any companies that you just found to be amazing during COVID besides Amazon?
Yeah. Let's see. Personal investments. What was one? I didn't buy Zoom. So.
You didn't buy Zoom?
No. I mean, all the stocks have been up since COVID. I mean, technically, all the stocks have done well because the stock market's just been on a bull run ever since March. But Amazon did really well. I'm trying to think of it. I can't think of one that did really well because of COVID. I think just all my stocks were up just since March, just because a lot of the U.S. economy is starting to recover.
So when you say can you share like maybe like three, like something that we wouldn't think of? Like some people probably wouldn't think of a railroad. What was another one or two, if you don't mind sharing, that most people wouldn't think of, like as boring
Yeah,
stocks?
definitely check out that company. It's like it's Warren Buffett's company. A lot of people know Warren Buffett, but they don't know his company that he actually owns and runs. It's called Berkshire Hathaway. It's one of the largest financial services company in the United States. They own a ton of your favorite brands like Geico, Dairy Queen, Dell, the battery company. I forget the name of that company. Duracell. They own like these really like, you think like, okay, what are like foreign products, but still everyone needs, like batteries. Like, you know how many products still run on batteries? So many. And they own that company as well as many others. So Berkshire Hathaway is definitely a great stock for the long run. I recommend you check out.
And then what about 3M? Do you find that one interesting because of all the like little things on that?
Right? They got their strong dividend, or they used to have a strong dividend. Let's see what it is right now. 3M I like. Let me see. I think it's like MMM or something. Yeah, that's the ticker. $120 billion market cap. It's up a lot recently. What's their dividend? Oh, they got a paying a solid 3% dividend, 2.9%. Yeah, I mean it's a solid company. Funny, I like 3M. I think it's a good company.
Well, what are you do the dividends make a difference for you? Are you like, do you find that exciting, or does it?
Yeah, dividends are great. Just free money on top of whatever price the stock goes up.
And do you reinvest your dividends? Like
sometimes I do, sometimes I don't. If I'm looking to just buy something for cash flow, just to like pay me every quarter, then I don't. But typically I end up like kind of waiting on all the cash, then reinvesting all the dividends in the same stock or a different stock.
Oh, wonderful, wonderful. Yeah. And then as we're coming out of COVID, do you find any changes in the market? Like, do you feel that it's gonna be a bear market, or is it gonna a bull market, do you feel?
I mean, there's a lot of teenagers investing in Robinhood right now, and they don't really know too much about the market, which is driving stock prices through the roof, through historic levels. I would say that the market, in the long run, typically if you hold the market, you'll be fine. In the short run, people have been saying there's a crash coming for 8 years. A lot of people already said the crash did come with COVID, and we're just kind of already backing up since. I would say as long as the Fed continues to just pump money into the government, we could see like this bull rally continue for like the next 5 years easily. But I'd say we should expect, soon for the growth of these giant companies to kind of start not going down, but just not growing by the same percentages it's been growing year after year.
Wonderful. So, is there anything else you'd like to share with us quickly? Anything else before you go back to college?
Yeah, I would just say for any young readers out there, go check out my books, Jack Rosenthal, Teen Investing on Amazon. You can go find the other book, Teen Entrepreneurship. Follow me on Instagram, starsocial.pro. If you want to shoot me a message or something. Other than that, really hope that this provided some value to young listeners out there, as well as parents who might have children. Definitely recommend that the children, listen or get the book or whatever. I'm really appreciative and glad you had me on.
Yeah. Well, Jack, thank you so much for being on the show. Moguls, check out Jack Rosenthal. He is fantastic. And Jack, I want to have you back. So please come back, and thank you everyone for listening to the show. And that was Jack Rosenthal. One more time, your social media.
Starsocial.pro.
Starsocial.pro, and check out his book and go get that. You're going to learn a lot. Teen Investing. Thanks so much, Jack, for being on the show today.
Thanks for having me.